Hey everyone, it's Mozart here. Well, first of all, congratulations to everyone on breaking the $100,000 mark. A new historical mark has been surpassed. Right now, Bitcoin is trading above 100,000. In this video, I'd like to break down what Bitcoin looks like after surpassing this mark, how dangerous the current prices are, and whether a correction is expected. And how far can we still crawl? So the first thing I'd like to point out is our long position on Bitcoin. So, that's what I was talking about. Two pending orders. There was Solana and Bitcoin here. Bitcoin has been working out for quite a while now. There was a pending order on the 21st of November, and the long position was closed on this shot. So there was also a long position on Ethereum. We closed 2/3 of the profit there. The remaining positions have been closed at break-even. Solana is still in progress. All these trades I share exclusively in my Telegram channel. You won't find any of these trading ideas on YouTube. So, if you don't want to miss out on new signals, make sure to subscribe to my Telegram channel. The link is in the description below this video. So, regarding Bitcoin, look, we're heading into the third wave after Trump, or the so-called Trump waves. The third wave of growth, 1, 2, 3. We've got two main channels. I'm currently talking about the technique. Here's this bluish, turquoise channel. Here's this white channel. We need to wait for the close of this daily candle. If it closes within this turquoise channel, we might reach 105 to 106K dollars. If we close the daily candle within this channel, this turquoise channel, then overall, we might just about crawl up to the levels of 105 to 106,000 dollars. Here's the monthly, R3 pivot, and it's quite likely we could even reach levels of 110 to 111,000 dollars, somewhere around here. It's up in the air. Reaching 114 to 115 is very much in question, but getting to 109 to 110 will be possible, but with some sort of quick rebound. This is the scenario if we end the day within the turquoise channel. If we pull back below the $101,000 mark, and especially below $100,000 by the end of the day, that won't be very good. Then, most likely, the price will head back down to the lower boundary of this white channel to test, somewhere down to our previous entry point. So, down to $95,000. Here's where you could re-enter at the $95,000 mark. This will be a good entry point if the price goes with the second option. Right now, there are two main options, two main outcomes. And if the price remains in the turquoise channel, there is an entry point, of course. And you could try to enter right from the current levels. But considering that we are going with such a not very large volume, although it is not very large yet, I don't know, maybe they will trade there today. At the moment, I'm feeling a bit hesitant to jump in. On top of that, we're starting to draw on the RSI, by the way. It's already a triple divergence. It all depends on how far the third wave goes, but for now, it looks like a triple divergence. And on the MACD, we're drawing a second peak. Just like that. This is already a clear divergence. It's also uncertain how far it will go. For the MACD to cross above the first peak, this one, I don't know where Bitcoin is supposed to go. 120. Then will surpass the first peak. What's the likelihood of this event? Well, not very high, considering how far Bitcoin has already gone. So, there could be a divergence drawn here. So here, for example, it could be 110, maybe, with a spike, to 114, and then a more or less sensible correction. So, roughly this kind of settlement. Technical. At the same time, dominance. By the way, I also wrote about dominance. It turned out perfectly with the dominance. I mentioned that there would likely be a stop in the 54 to 55 range after December 3rd, and that's pretty much how it turned out. This very block at 54 to 55 stopped right at 54.76, after which there was a strong bounce. Nevertheless, dominance has hit the 200-day moving average. This is a retest of the 200-day line. Given the strength of the current drop, Even if dominance decides to turn around, it would need to do so. At least through a bullish divergence, what I call convergence, meaning the indicators need to come together. So, it would need to make at least one more impulse down, possibly updating this low, and then turn around. But during this impulse, altcoins will still have a bit of a surge, so I'm not closing all my positions just yet. That is, at least make one more impulse downwards, here, perhaps with the renewal of this low, and then turn around. But during this impulse, altcoins will still have a bit of a surge, so I'm not closing all my positions just yet. Even if it happens that way. So, I can't really say how it's going to play out just yet, but I do have more confidence in at least one more wave of growth right now. That was about the technical side and what's happening in the blockchain. So, the first and probably the most important thing is funding, that is, the funding rates. When we broke through the $100,000 mark, the funding rate for Bitcoin shot up to an average of 0.1% across all exchanges. And now we've started to approach the levels that we observed at the peak in March of this year. 1, 2, 3. So, this is already quite a risky funding level. This doesn't mean that it can immediately reverse the price, but it does indicate that the market is starting to get quite overheated. And here we have the first wave of funding growth with a breakout of 0.1% for Bitcoins. So, if you hold long positions, you'll be paying 0.1% for 8 hours and 0.3% per day for 3 days, minus 1% that the position gets eaten up. This isn't the most extreme funding we've ever seen in the markets. So, if we rewind to 2021, in January during the bull run, funding rates peaked at 0.2%, double current levels. Through divergences, growth continued, followed by a reversal. I'm not saying, and then the growth continued through divergences, followed by a reversal. So, hear me right, I'm not saying that just because we've broken the $100,000 mark and the funding is at 0.1%, that's it, we're reversing, liquidating everyone, and the market is overheated. No, I'm not saying that. I'm saying that the market has entered a stage of overheating, and at this stage, it really starts to get dangerous. So, generally speaking, from this stage, when the funding goes above 0.1 after certain actions, certain conditions, and divergences in funding, the price tends to drop by 15, 20, or even 25%. And in some cases, it can be as much as 30% for Bitcoin. Well, I won't say what the alts do at this point. So you don't have to be ready for it right now, but you have to start preparing for it. So, if we're talking about timings, I reckon we've got some leeway until the end of the year, probably up until around the end of December, like December 25th. There's a hypothetical buffer that could even stretch to January 20th, which is when Trump gets inaugurated and takes office, and that's when the facts will start being sold. So, it's not urgent yet, but we need to start thinking about it and keep it in mind. Next, CDD stands for Coin Days Destroyed, which refers to the destruction of what's called coin days. Coin days are essentially the product of the number of coins sold multiplied by their longevity. So, the more old coins that are sold, the higher the indicator will show a peak. We had a very high peak. So, the more old coins that are sold, the higher the indicator will show a peak. The peak was really high for us. Just a few hours ago, when Bitcoin broke the 100,000 mark. And this is confirmed by another indicator, the so-called dormancy, which only assesses the age of the coins. This peak also happened at this time, but considering that at the same time, news came out that MTGOX had transferred another batch of its Bitcoins, I opened the ARC and checked, and indeed, about 6 hours ago, it showed me a transfer of nearly 28,000 Bitcoins. I wonder where they went, somewhere else, then 24 went out, but it doesn't even matter where, maybe not even to an exchange, but to some other wallet. The important thing is that they were moved on the blockchain. That's a big transfer on the CDD, so it's not like long-term holders decided to cash in on profits, although that's not entirely out of the question. This means that the lion's share of the profits that were supposedly locked in, according to the blockchain, was actually from that transfer from Mt. Gox. That's important. Gox. That's important. And if we take a look at the breakdown of the last 6 months, we'll see the same thing. We see similar spikes in the CDD indicator. So, July, that's when those Mt. Gox transfers happened. Gox, when it started redistributing something. And here is this next surge. So, just as I previously ruled out these spikes as having a long-term impact on the market, I can do the same now. These aren't long-term holders, of which there are many. This is one MT. Gox, one custodian is just moving something somewhere, getting ready to pay out, redistribute, and so on. Moving on, what's much more important is what the short-term holders were doing in this case. And in this metric, you can see a table that shows how many bitcoins were specifically transferred to exchanges by short-term holders. Well, most likely with the aim of locking in profits. So, at that peak spike, we had about 28,000 bitcoins in an hour. This is a breakdown for 1 hour. Each iteration represents 1 hour. That's quite a lot, but even in the last 6 months, we've had quite a few of these spikes. So, I wouldn't say it's anything unique. There have been such spikes. It was something close to that. Let's take a look at the data from the start of the year. The spikes were much bigger. So, in March, they were stronger than the current value. We're heading towards a higher value, which is the upper limit of the norms. Here's the corridor. The norms range from 0 to the maximum, and these are already extreme values. So, right now, there haven't been any extreme values in terms of short-term holders locking in profits. They didn't really have much of an impact on the market. Therefore, taking this fact into account, it can also be said that the price of Bitcoin could still go up a bit further. Overall, everything I've just shown you, yes, we can see some pressure, and yes, we're noticing an increase in funding to some already high levels. The market's long position is starting to become quite obvious. We see CDD, but it's all attributed to MT. It's attributed to the upper limit, but not to extreme profit-taking. It's also about technical analysis, suggesting potential movement on the chart based on candles. The key now is to wait for today's close. After breaking significant levels like $100,000, similar to when it was $10,000, the closing candle is crucial. It will close above or below $100,000 or in the upper or lower channel. Then, we can make further conclusions. And it will close either above or below $100,000, either in the upper channel or in the lower channel. And after that, we can start making some further conclusions. And based on this, I will give a new limit, or go with the current ones. I don't know yet if it's going to be tomorrow, and I'll share that in the Telegram channel as well. Just a reminder, the link to it is in the description below this video. We'll also jump back on air. Thank you all for your attention. Congrats all for breaking through the $100,000 mark. Signs off. Have a great day. Goodbye everyone.